What is considered a low-risk investment? Well, folks, I guess it depends upon where you are in the world, but here in the United States, most people say low-risk investments are the gold standard. So let's talk a little bit about that. Now, if you're asking a question about that, you're probably concerned about the future, and maybe you're just a little on the confused side. I've been involved in tax lien certificates and tax deeds for about 30 years. Tax liens are considered a low-risk investment. And why is that? Because number one, you invest directly with the government, and number two, if the property owner does not pay for the property and pay the taxes and pay you back, that simply means you're going to get the property. Well, in most cases, you're going to give your money to the government, and most people will pay the taxes, as I'll explain in a few minutes. They'll pay their taxes. When they do, you can earn 16, 18, 24. You can earn up to 36% on your money on a tax lien certificate. So it's considered a low-risk investment. Now, if we go out and talk to the gurus of the world, stockbrokers, investment advisors, financial planners, they're going to tell you the safest investment is United States Treasury notes, and that's probably very true. Those investments are considered the gold standard. But I've found locally, if I want to buy tax lien certificates, I can earn 16, 18, 24, and even 36%. Now that's a lot different than a treasury that pays 1%. So a treasury note is the gold standard, but you can do just as well with a low-risk investment by buying tax lien certificates. About half the states sell those tax certificates. The other half of the states will sell tax defaulted property. Now the experts, that's the advisors, the stockbrokers, the financial planners, they're all going to say treasury notes are the gold standard. So certainly you could do that, but your return is going to be around 1% and maybe a little less. So the least risky investment that most people can recommend is the United States Treasury note. Now the least investment risk that I think I can have is locally, because I'll pay someone else's taxes, and when I do that, I get a tax lien certificate. Now if I was in Florida, I could earn 18%. Now if I was in Arizona, I could earn 16. If I did a place like Texas, it would be 25. If I did Illinois, I could earn 36. My point is, I'm going to pay the local government. I'll get a tax certificate, which is a piece of paper. If the people pay me, I'm going to get the high rate. Imagine getting 36% in Illinois, or 25% in Texas, or 18% in Florida. These are wonderful rates of return. You're getting the idea. All right, so if you like treasuries, nothing wrong with that. I'm going to suggest you really investigate tax lien certificates. Because what are we after here? We're after an investment that has low risk. All right, so what does that mean? Low risk doesn't necessarily have to be low reward. All right, so low risk could be buying diamonds. I think they probably hold their value. What if you bought gold bullion? That holds their value. What if you bought treasuries? Okay, so I'm not negative on any of those. Those are all low risk investments. But if I can't make 1%, I'm not doing very well. All right, so investing has risks, and there's lots of risk out there, okay? Now, you don't want to get into the heavy duty risk. You want to get into the least risk possible. Now, anyone that's done any research over the past 20 years knows that the government constantly tries to assure us that they're managing not only the government, but the economy, and everything is going well. And they're doing so well that you could just research the last 20 years and see how well they've done for us in the country of Afghanistan. How did that work out? Well, I have some big questions about the government and how they've run that for 20 years and used up trillions of dollars. Tax liens and tax deeds are local investments. I like local investments. I can check up on those people and see what they're doing, and so can you. Now, I'll be right back and tell you more. Okay, what are we talking about today? Well, I'm trying to answer your question. What is considered a low-risk investment? Well, certainly United States government treasuries are the lowest risk investment. Investment advisors will tell you that. The government will tell you that. Financial planners will tell you that. I prefer local investments in tax liens and tax deeds. Why? Because I want to take care of myself. I want you to learn to take care of yourself. So do it locally. You can buy a tax lien certificate from your local government if your state sells those. And if the people pay their tax, which most of them will do, 97% will pay the tax. When they come in and pay you, you're going to have your money back plus 16 or 18, 24%. That's a nice rate of return. So what's considered low risk? Well, I'd say start out by picking the right program. I don't think there's anything that has zero risk. What could happen? Well, you could have a storm. You could have a hurricane. You could have a firestorm like they have in California and burn up whole counties and whole cities. All right, or you could have droughts like they have in Texas. I mean, there's all kinds of things that can happen to the economy. Now, I've had things happen to me because I thought that the market would stay the same. I had a market where it was growing and growing, sometimes as much as 1,000% in a year, and we were making millions of dollars. And when the whole market crashed, it crashed down on top of us. Well, that was a big surprise. Okay, what about if the politicians aren't honest and they tell you they're going to do one thing and they do something else? What if you have a big storm? All those things can happen to you. And so there's risk in investments. So you want an investment that has the lowest risk possible, just buy those treasuries. If you want an investment that's got a relatively low risk, I say tax liens and tax deeds. Why? Because they're local and you can handle it. All right, but economic advisors are going to talk about treasuries. Most of them don't follow the tax lien and deed business. It's kind of an alternative investment, whereas treasuries, there's nothing alternative about that. All right, now tax liens and tax deeds have been around for over 200 years. All right, now the local government needs money if they don't collect the tax. So if they need money, how are they going to get it? Well, they're going to get it from property owners. The property owners have to pay a wealth tax. And the statutes of the state are created by the legislature. The legislature says everybody will pay tax. So they have the board of supervisors or county commissioners. They tell them to get the treasurer out there and levy a tax, collect the tax. If you can't collect the tax, issue a tax lien certificate. Now that's pretty good because now you can buy those tax lien certificates, and guess what? You're buying it and paying 1% of value, 1 or 2% of value. Guess what? If the people don't pay you, you just bought a property for 1 and 2%, and you end up with a deed to the property. Not too bad. All right, tax lien certificates are considered a safe and secure investment. So there's a property. You bought the tax lien on the property, it's safe and secure. If that couple bought the certificate and the people didn't pay, they would get the house. Well, what if they paid $2,000 for the certificate? Would you like to get that house with no mortgage for $2,000? Well, that's exactly what could happen. All right, so it happens all the time. All right, now let's use this as an example. Let's take a $100,000 property. $100,000 property, and it's got a 1% tax. All right, you're going to pay the tax lien certificate. I say that's a low-risk, safe investment. You've got $1,000 or $2,000 invested. If they don't pay the certificate, you'll get the property. If they do pay the certificate, you'll earn 16% in Arizona is the top rate, 18 is the top rate in Florida, 36 is the top rate in a place like Illinois, 24 is the top rate in Iowa. You're getting the idea. So a treasury is probably going to pay you 1%. I think this is a relatively safe investment to buy a property like you see there now. Buy it by buying the tax lien certificate. All right, if the people don't pay, you get the property. If they do pay, you're going to earn those high interest rates. I would consider that a low-risk investment. Is it as low risk as treasuries? Well, you could argue that out. All right, I think that they're very low-risk investments, and all of the people that are educated know what to buy. Now, did I say go out and buy them blindly? No. You shouldn't buy tax liens, and you shouldn't buy tax deeds unless you've had boots on the ground and you know what you're buying. This is not a place to be guessing with your money. Tax certificates pay outrageously high rates. All right, you want to make those high rates, but you don't want to buy anything or something that you haven't seen. So you can see there's a tax certificate. It's an official government certificate. Is it without risk? Well, the risk could be that you don't get paid. So don't go buy a swamp. Some people buy swamps. Some people buy the tops of mountains. Why would you do that? It's because they're uneducated investors. So what is considered a low-risk investment? Approximately half of the states sell tax lien certificates. The other half of the states are going to sell tax deeds. Now, when they sell a tax deed, they're selling a property. Now, I'm not going to call that a low-risk investment because you're buying properties that are used and abused. All right, but if you can buy them for 10 cents or 20 cents on the dollar, then you can resell those properties for a much higher price, 40 or 50 cents on the dollar, and make a nice rate of return. So you're kind of getting the idea of what we're doing here. All right, now I didn't make the rules for this business. The state legislature requires every property owner to pay tax. It's nothing more than a wealth tax. So if you own property, they consider you wealthy. So they're going to charge you a tax. Usually it's 1 or 2%. Now, places like New Jersey and New York, it's going to be higher than that, but you're getting the idea. You're only going to pay the back taxes. Now, if you paid the back taxes, I think you've got a low-risk investment, because it will pay such high rates. Now, I've been at this business for 30 years. Lowest rates I've ever seen are 8%. The highest rates I've ever seen are 50%. Now, they're not that today because the rates are changing. You don't know. From time to time, the legislature will change the rules. So from time to time, you'll find like New York right now pays 12%, and the counties that sell tax lien certificates. All right, but Illinois still pays 36%. Iowa still pays 24%. Florida still pays 18%. What if you could learn how to do this? You could do the whole thing online. Wouldn't that make a big difference? All right, so I'm going to button it up for today. Below me is a free gift, so you want to take advantage of that. If you have questions, just tell us what your questions are. Type them, send them in to us, and we will be glad to answer your questions. All right, in addition, I want you to be careful. Now, being careful means don't buy a tax lien certificate or a tax deed unless you've had boots on the ground. You know where it is. Now, people buy tax liens, and they're out in the middle of the swamp in Florida. Now, what are you going to do with the property in the middle of the swamp? Well, you're going to end up owning it because no one's going to pay the tax certificate. I can tell you that right now. So you don't want to buy those. All right, you want to buy actual properties that you've seen, and you can see them online. You can see them with the satellite, and you can send a broker to check them out. So don't buy what you haven't seen. Now, my name is Ted Thomas. Don't forget that free gift is right below me.